Hi everyone, welcome to the session. In this session I am going to continue my discussion on consolidation accounting. So in this particular session I am going to continue my discussion on non-controlling interest, how to calculate non-controlling interest when there is pre and post acquisition profits. So in this regard I have taken an example. So let's go through the example, then we'll come back to the solution. Peter Company acquired 90% of the 100 million share capital of Silva Company on 1st January 2016 when the retained earnings of Silva Company were 300 million and the revaluation surplus was 80 million. The fair value of the NCI at this date was 50 million. Okay, so you are given the NCI. You are given the fair value of the NCI as 50 million. In the year ended 31st December 2016, Silva reported profits of 60 million and a revaluation deficit of 10 million. So please remember these are subsequent to the acquisition. So these are post-acquisition profit. What is the carrying amount of the NCI in Silva at 31st December 2016 if the NCI is measured as a proportion of net assets? And the second one is if it is measured at fair value. Okay, the question is very clear. Now you are given the pre and post acquisition profits and the NCI, the fair value of the NCI is also given. Okay, and you are required to calculate the NCI as a proportion of, if it is measured as a proportion of net assets, as well as if it is measured at fair value. So you are required to calculate NCI at the reporting date. Okay, now let's analyze this question. Peter acquired Silva 90% of the share capital. Okay, this was acquired on 1st January 2016. The acquisition date will be 1st January 2016. At the time of acquisition, the share capital was 100 million and the retained earnings were 300 million and the revaluation surplus 80 million. So 300 million and the revaluation surplus or revaluation reserve 80 million. The total net assets at the time of acquisition were 480 million. So this was at acquisition. Subsequent to the acquisition, the company profit has further increased by 60 million. Okay, so this increased by 60 million and the revaluation reserve reduced by 10 million. There was a revaluation deficit. So therefore this reduced by 10 million. So therefore, if you take the snapshot of the financial position at the reporting date, which is 31st December 2016, so what will be the financial position? So let's take it. So 31st December 2014, this is the financial position. Share capital remains the same, 100 million. However, the retained earnings increased by 60 million. So therefore, the total net return earnings will be 360 million. However, the revaluation reserve reduced by 10 million. There was a revaluation deficit. So therefore, it will be 70 million. So therefore, the net assets will be 530 million at the reporting date, which is 31st December 2014. So basically, these profits are post profit and this is prior to acquisition, pre. Okay. Now how do you calculate NCI? In my previous video I discussed when NCI is calculated as a proportion of net assets. There are two ways where you can apply, but the second method will be the easiest method where you can save time. Okay, so this is what I am going to apply in this calculation. So I am not going to show you the first method. So if you want to watch that method, so what I am going to do is I am just going to put the link above. So what you can do is you please go and watch that video. Okay, so the NCI on 31st December 2014 based on net assets. So how do you calculate this? How do you calculate? So if it is based on net assets, forget about the pre and post. Take the net assets at the reporting date straight away, which is 530 million. So net assets on 31st December 2014 was 530 million. On that 10% will be how much? 53 million. So this will be the NCI at the reporting date based on net assets. Okay. The second part, if NCI is measured at fair value. If the NCI is measured at fair value, you just can't straight away apply 10% of the net assets. So therefore, we need to apply the first method. So how do you calculate that? First of all, you need to take, net assets, we'll take non-controlling interest at the reporting date. Okay, so here we need to take the fair value. At the time of acquisition, the NCI, this is NCI, NCI was 53 million. The fair value of, it was 50 million, So this is NCI 10%. At the time of acquisition, the fair value of NCI was 50 million. Okay, so we need to take the fair value of NCI at acquisition. How much? 50 million. To this, we need to make an adjustment to the subsequent profits. Okay, so we have taken the fair value of NCI at acquisition 50 million. To this, we need to take subsequent, which means the post profits. So when you take the financial position as at 31st December 2014, as you can see, the return earnings increased by 60 million. So therefore, the portion of this 60 million should go to NCI, which is 10%. Okay, so 10% of 60 million. So this is the retained profit. So 60 million times 10 will be 6 million. Apart from that, there is revaluation reserve, which decreased by 10 million due to revaluation deficit. So therefore, this 10 million has to be adjusted here. So revaluation deficit, which is 10 million minus 10% on that will be 1 million minus. So therefore 56 plus 1 minus will be 55 million. So 55 million will be the non-controlling interest based on the fair value. Okay, so this is the answer for the part 2. So basically this is how you calculate the non-controlling interest when pre and post acquisitions profits are given. If the NCI is calculated based on as a proportion of net assets, so what you can do is straight away, to save time, you can apply the percentage of NCI on the net assets at the reporting date. Otherwise, if it is based on the fair value, what you can do is take the fair value, make adjustments to the subsequent profits. Okay, so here in this case it was 50 million, and subsequently the company made a profit of 60 million, and there was a revaluation deficit of 10 million. So those adjustments, once you made it, okay, so you can arrive at the non-controlling interest at the reporting date. Okay, so with this I will conclude the session. If you want to watch more videos on accounting and management accounting, please consider hitting subscribe button, and I will see you soon with another video with consolidation accounting. Until then, bye for now. Thanks for watching.